Hello, everybody. Thanks for checking out stockmarketjobber.com. We are a trading community dedicating to helping newer traders and investors learn how the markets work. I have a lot of experience in the trading world. I was the head of trading at three different money managers, institutional money managers, so I oversaw all kinds of trading strategies: hedge funds, mutual funds, arbitrage, high frequency. I was also spent some time as a market maker, and I was brought into the industry and traded directly for the great Mario Gabelli, and then I went over and traded for the great Steve Cohen. So I've been around the block a few times. So let's talk about what's going on in the market today. All right, we had a jobs report that was, on first glance, way better than uh, estimates, significantly better. So I don't know if there's an anomaly in there, but it could be a case of good news is bad news. Now, let me explain. Good news for the economy means that good news for the economy could be bad news for the market, because if the economy is really exploding, then there is going to be more reason for the Federal Reserve to keep raising interest rates. So if you recall, or if you've been following the market over the past few months, there's this talk about this pivot where the Fed is going to go from raising rates to cutting rates. Now, if the economy is really expanding, that in itself is inflationary. So this good job report could make the Fed need to keep on raising rates. So we're retesting this important level, and this happens a lot in markets where levels that were a resistance level become support. And we'll know over the next few days whether this will hold. If it holds, we probably go into another uptrend. If it doesn't hold, it's a good chance we have pretty decent sized sell-off. When a market is moving higher, it's because there's not enough supply or sell orders to fill all of the demand or buy orders. When we break through resistance, or I'm sorry, when we get to resistance, there is enough supply or sell orders to fulfill all of the demand or buy orders. That's why markets stop moving higher when they reach resistance levels. Now, when we break through resistance, a lot of the people who sold at these highs regret doing so, and they tell themselves, I made a mistake. I want to buy this thing back, but I don't want to pay more than I sold it for. So they place their buy orders at their former selling price. This is seller's remorse, and seller's remorse is a characteristic of a bullish market. Now, if this level does not convert into support and the market heads lower, well, we could get a pretty decent sized sell off. I think that the Facebook numbers yesterday were really not as good as appeared on first glance. Um, but the important thing to remember about markets is some levels are more important than others. Here we see support became resistance. This is the 390 level. This is due to buyer's remorse. People buy and then they regret doing so when the price goes lower, and they place their sell orders at the same level they bought at. And then here again, we see the seller's remorse turning resistance into support. So over the next few days, keep an eye on this, how SPY reacts around this 410, 411 level. It's like the market's at a crossroads now, all right? And if it spends a few days consolidating, there's a really good chance we're going to go into a no uptrend. But if over the next few days we break this support, we can get a pretty decent sell-off. And things sell off faster than they move higher. And that's because people sell for fear, out of fear, and people buy out of hope. And fear is a much more powerful emotion. So if you like to learn more about the markets and how Wall Street really works, as opposed to, I don't know, someone out there who claims they have a lot of experience but doesn't, or thinks they know what they're doing that doesn't, please join our community, stockmarketjobber.com. Subscribe to our YouTube page. And that's it, everybody. Hopefully you have a nice day. I will talk to you soon.